Kothari joins us, CIO with AlfAccurate Advisors. Rajesh, thank you for joining us. Haven't interacted with you in a while, so always good to have you back. What's your view for 2023? Are we in for a year of good returns or flat returns? Because if I look at what brokerages are indicating, whether it is the Credit Suisse or Citi or Goldman Sachs or JP Morgan, they are making a case for no returns for Nifty this year.
Hi, Nikunj. First of all, wish you and all the viewers, great 2023. I think if you look at 2022 versus 2023, there are going to be big differences. In 2022 is like the world was upside down, almost like, correct? Whatever worst you can think of, everything has happened. In terms of the geopolitical, in terms of the inflation, in terms of the interest rates, in terms of the supply chain pressure. So think of any bad news and it has happened in 2022. So from that perspective, I think 2023 is going to be probably much better compared to 2022. I think the worst of inflation is behind us. The worst of interest rate cycle is behind us. The worst of supply chain index pressure is behind us. Hopefully, Russia-Ukraine is also entering into probably kind of a stalemate kind of a situation. So nothing worse probably from here, even on geopolitical side. So the macros are reasonably neutral to positive, and markets are always a little bit ahead of time. So yes, Fed, the last leg of hike, which may happen till March, which is possible, but otherwise markets are normally ahead of curve. So I'm not too much worried on the macros front. India has been reasonably resilient in last 12 months, which was an acid test for the country, be it FPI inflows versus domestic inflows, be it inflation of US versus India, or be it the interest rates of US versus India. So 2023, good overall year. We expect a good stable year. And from here, I think there is going to be a lot of bottom-up opportunities which will come up in India across various sectors. And if you look at the second quarter of FY23, it is proving that, data point. I think there are many bottom-up opportunities from here on. And I think the growth cycle is just the beginning of the growth cycle. So another 2-3 quarters of consolidation possible from the economic data perspective, and then the growth will start accelerating and we'll move from second gear to third gear, hopefully.
Jeffrey's report, big upgrade on metals, big upgrade. For Hindalco, for Tata Steel, what was underweight has now become a solid overweight and a buy. Is there merit in buying metals? It's difficult to call, but if China opens, if things change on that front, metals could make a roaring comeback, because some of the metal companies now, Rajesh, they've got excellent balance sheets, no debt, manageable cash flow, and we've seen from the 2021 experience that when the cycle turns, they can hit a jackpot.
I think the best way to play that jackpot is to play through the capex. So more the money metal companies make, the debt-free balance sheet, it makes them lendable kind of a players, which is the best thing to happen for the country. So as a investment philosophy, we do not invest into metals because of too much uncertainty, not only on the global supply chains, but also because of the global tariff policy. And you have seen it last 12-18 months, what kind of different headlines which results into either up 10% or down 10% for most of the metal stocks. So we are cautious and therefore we do not buy into metals. But the other way to look at it is, as you rightly said, that many of these companies have become debt free, and therefore the new revival of capex has started even from the metal sector. And therefore, probably it is better to play through the capex cycle rather than play through the metals.
Hold that thought, Rajesh, because for the market, there is a solid up move that we are witnessing at this point of time. 18,200 was a bit of a resistance zone for most part of the trading session. We have scaled that now, but still just meandering around that 18,200 level. The last leg of this rally has actually come from the banking names. Let's pull up the Nifty Bank. You'll see IDFC First Bank has suddenly moved 4%. Bandhan Bank is doing well, and ICICI Bank plus a couple of other heavyweights are also trying to put their weight behind the markets as well. Other than that, from the broader market, Shipping Corporation of India deserves mention, and the reason is it's 10% off the lowest point of the trading session. Of course, there was this news regarding clearance of the demerger, which was one of the steps for the divestment rally to go through. So that also has happened, and that stock is now up around 6%. Rajesh, one of the themes that you have been betting on has been the entire chemical space, right? With this entire China plus one, Europe plus one, rally working out, which are the top companies that you think would likely benefit?
Well, I think this China plus one, Europe plus one is primarily for two important sectors. One is specialty chemicals, and second is capital goods and related ancillaries related to capital goods. If you look at from the capital goods perspective, many of our portfolio companies, they have already announced the new capex, particularly to cater to their global parent companies. For example, if you look at companies like Schaeffler, please put a disclaimer: the companies which we are talking, we might be holding for our PMS clients. So Schaeffler has already announced the capex of 1,000 crores to shift it, line from Germany to India. Similarly, sometime back, I think about 2 weeks back, Timken announced fresh capex of 600 crores. Again, that is to meet, to the other market, primarily for export market. If you look at the companies like Schneider, they also announced the capex to increase capacity by almost 2.5 times, at its West Bengal plant, and so on and so forth. So I think that many of these companies are probably are doing the best of the performance, both in earnings as well as the recent stock market performance, which is a reasonably satisfactory from our perspective. If we look at the specialty chemical, we need to do really bottom up. In specialty chemical, particularly, we like the segments of fluorine chemistry. So that is a specific chemistry which we like a lot. And right now we are, having the companies under the fluorine chemistry basket in particular. So you need to be very, very stock specific when it comes to specialty chemical space. This is a space which I think the opportunity is huge. And I keep saying that what India has done in pharmaceutical, potentially India can do the same thing in specialty chemical space. And we are seeing the increasing traction across the companies within specialty chemical, which are getting the more inquiries from their customers. They are doing the huge capex for another next 2, 3, 4 years. They are introducing the new products, and so on and so forth. So we are reasonably confident on China plus one as well as Europe plus one themes, and both are working absolutely, probably better than what we thought in last 2, 3, 4 quarters.
Pharma and chemical a good comparison, because while 5 years ago the pharma story was great, today saying that what Indian pharma has achieved globally is actually disappointing. Lupin margins are down, Dr. Reddy has struggled, Sun Pharma has problem. So if chemical goes the pharma way, Rajesh, then we have a problem.
No, Nikunj, I think, Indian pharma, look at last 20 years back, what was Indian pharma exports to the total world's export? Today, Indian pharma has become the medical store for the world. Just like an IT company, the global office has become India's office, am I right? Similarly, India has done a huge work on the pharma side for the global players. Don't look at the margin. Look at, first of all, the market share. That's the first thing to do. What happened on margin is because of the other issues, which is less to do with their presence in US. It is more to do with the generic pricing, because ultimately the pricing has not worked because the generic competition is increased. Specialty chemical is a different ballgame, correct? Here it is not like generic pricing kind of thing. So completely, different thing. What I'm saying is, from the domain perspective, just like how pharma in India came up in last 20 years, specialty chemical has a similar scope and potential is already happening. If you look at the capex of top 10 players in Indian specialty chemical industry, their capex for next 2 years is equivalent to almost last 5 to 8 years. So huge visibility for the growth ahead. And I think we have a long way to go.
Rajesh, on that optimistic note, we'll let you go. Thank you so much for making time and speaking with us. And here's wishing you a bigger, better, and brighter 2023. But time now to slip into a very